In today's video, we're going to see what support resistance is, how to mark them on the charts, how I analyze my charts before markets open, how I mark supply demand zones. I have received a lot of requests on supply demand zone videos, so I'm coming out with that video today. What I will do is I will mark on the charts, I will show you what swing highs and swing lows are, I will show you how to mark gaps, I will show you how to mark support resistances. I will show you what important levels on the charts are and how I mark them. I will also show you how to prepare the charts before the day begins. In my post-market analysis videos and the price action videos that I post, I mark on those levels what that level means, where it is coming from. So for instance, on one particular day price has fallen, so it becomes a supply zone. So I mark from which day this is a supply zone. So accordingly, please ensure that you watch the video carefully so you learn how to mark your own supply demand zones. I work on the 5-minute Nifty or Bank Nifty charts, and I go on a higher time frame for historical price action. And I also watch daily charts, but I don't use daily charts for trading because I'm an intraday trader, so I only trade on 5-minute charts. But the daily charts give us important levels as far as swing highs and swing lows go. And also remember, reliability of candlesticks goes on increasing as we increase the time frame. Daily time frames will be more reliable than hourly time frames. Weekly time frames will be more reliable than daily time frames. So the candlestick formations which we see on the charts, their reliability goes on increasing as time frame goes on increasing. So all that and more we will discuss in this video today. So please watch till the end. Before we go to the charts, if you have not subscribed to the channel yet, please subscribe, hit the like button, and also ensure that you comment below with the topics that you want me to cover in upcoming videos. Supply and demand zones are very important zones. See, you don't need to be extremely accurate with them, but you have to ensure that you mark them as zones. Don't mark just one line or just one area. Okay, I'll show you today how to mark the demand and supply zones. It's one of the simplest things to do once you get a hang of it. And today we will be working on the Nifty 50 chart. It's a 5-minute chart. Today is the 11th of Jan 2022 and I'm recording this video as of today. Before we start, let me just mark down the important levels that we need to be marking every day. Okay, so the first level that we are going to mark is an important supply zone that we find anywhere. So let's write that down. Second important area we are going to mark is the demand zone. The third area we are going to mark is any point from where the market has given a breakout and has not returned to that area yet, or it has returned to the breakout line and taken either resistance or taken support, whichever way it is going. Important breakout lines. The fourth area we are going to mark as important area is the virgin CPR. Fifth area we are going to mark is the gap. Gaps act as important support or resistances whenever price approaches them for the first time. So these are the important levels we are going to mark. So let's go ahead. You can see the tool that I have here. I keep this tool ready. You can mark favorites for yourself and you can use this tool. All these tools that you see here are all marked favorites by me. So that's why these tools are present in this bar here. Okay, you can do that. You can do the same thing. I'm using the TradingView software. So as you can see here, this is the TradingView software. I use their website to watch charts in the live market and for backtesting as well. Now, which is the most important area you see here? Let's select this tool here, which is the ray, and which is the most important area that you see here, an important area from which price has turned. Let's say that for this day we can see that this is an important zone where price has made a turn. So it's made a U-turn, right? See, you can see this area here. It's made a U-turn like this. It hit this area and then fell, right? So after that, price has not returned to that area yet. So that is an important area to be marked. Suppose the 10th of Jan has not yet come. This area coming from the 7th of Jan becomes the most important area. So now you can see, since we marked that area, you can see how price has taken support at the same level. You can see the pin bar here. See how perfectly it takes support. I will just remove the drawing here and I'll show you. See, you can see the pin bar. That is how accurately support resistance levels work. Alright, now the next important level that we can see here immediately is this level where price has taken resistance multiple times. Let's count the number of times price has taken resistance here. So this is 1, this is 2, this is 3, and then you can count this area also. You can see the wicks there, so that is 4 again. And finally price broke out with this candle here, and then look at the way price takes support at the same level. So again we find touches here and here. So how important that area becomes. And then after that price bounced from the same area. Let me delete this and look at this candle which happened in the same area from the same line. That is the support area. So that is how you should mark these areas. Don't worry if you don't see these areas immediately. Your eyes will start getting trained as you look at more and more charts daily. Make sure that you are working on backtesting and you are taking out a lot of time if you are planning on becoming a full-time trader, and if you plan on taking trading seriously, then make sure that you are serious about watching charts and watching all these levels. Okay, now the next level that I find important here, and I would have marked, is this level from where price had taken a bounce. So mark the area here. Now look at the way price reacts to these zones. See, we mark that area. Look at the way price is reacting around this area. And then this big candle has broken that resistance. So here price took support with this candle, and after this effort it broke that level as a support, and then it took a resistance here, fell, could not break that level, again took a resistance, fell, and then with this candle broke that level, and finally this big candle was formed. These are all recent examples that I'm showing you. These might not exactly be the levels which will be applicable now in the charts, but I'm just showing them to you as and how they're important here. Now let's go back a bit. Now the levels that you should have ready on your charts, we can see them here. Now if you point your pointer here, then you can see that these levels are important, but you see that it is not a single line in which the prices reacted, and price has not bounced from a single line here. So instead of drawing a single line, you can draw a zone here. Now this is how I mark zones. See, I'm going to touch this area here, I'm going to touch the wick, and I'm going to draw a line here. So what I've essentially done is I've taken a support level here, I've taken a support level here into consideration, and I've taken a support level here. And see how important it is. Price bounces every time it goes to that area. The next time price reverses and comes back to that zone, you should be ready with this level, and you should know that this level will be a level which might provide good support to the price. Who gives these levels? It's the market itself that gives us these levels. So these are historical levels that you are marking based on the price action in the past. Now look here, you can see this area here. See the price action in this area. You can see that price bounced, came to this area, but then price did not cross beyond this level. From the same line, we can mark a zone like this. And now let's see how price reacts to that level. You can see here is the 10th of Jan, and price opened at the same level here and took resistance here with these candles. It went down, it took support at this level here, because this level here or from the 7th of Jan was providing support, and then from there it bounced, and then it took this big candle to break that level. Then it came here at this level and took resistance. Again we can see price action in the same zone that we have marked. So this is how you should be able to mark zones and not just lines. Okay, now let's move ahead. What I'm going to do is I'm going to just remove all these drawings for now, and let's see what important levels we see here. Okay, now see, can you see this wick here? I'll just magnify it for you. See this wick. Now let's see if we see any price action going in the favor of this wick. So you just have to mark, let's say we'll mark a zone here, right? We'll mark a zone here, and all my zones are extended to the right. Okay, so you find that setting. So if you go inside the setting of this box, see, this is the settings tab. You find the style here, and then you find this area here saying extend right. So if you check this, then the box will be extended to the right. So let's say that we uncheck this, then you can see that the box is only in the area that I just drew it for. So now we have extended to the right. Now let's say that this is the area in which price had bounced previously. You can see this area. So before this day begins, we want to mark the correct area. So what we can do here is we can just extend this to this level here. So what I just did here was I took another point into consideration, which was this point here. So 1 and 2. So we got one bounce here. This was the bounce. Then we got the second bounce, and then there was a major buying that happened after that. Okay, let's move ahead now. Let's see how price reacted at that level. See, now let's zoom it up a little bit and I'll show you. See, the price took support at this level. It made another pin bar at this level, and then again at this level you can see there is a lot of buying strength at this level, and then price bounced from here. That is the way that price reacts to market's own levels, and it is very easy to mark these levels once your eyes get trained. You must ensure that you watch a lot of charts for your eyes to get trained, and only then you will be able to mark these levels with a lot of confidence. Now let me activate the pivot points and I'll show you the important levels that we can see with them. Now we have the pivot points activated. See, this is 11th of Jan. That is the day that on which I am recording this video. We can see here how important the CPR is. So you can see this is the CPR, how important that level is. See, price made these wicks here. It bounced, again came to the central pivot here, again bounced, made this big green candle, and then that was the bounce, and price never returned to the CPR again. That is how strong CPR can act. Okay, now going back to levels. See, this is a virgin CPR on the 10th of January. See this area. So you can just simply mark a virgin CPR like this for the 11th. But this virgin CPR is very narrow. So this kind of a virgin CPR, it is okay to not mark. So it's fine to not mark that virgin CPR. So you can just simply delete it. Now let me show you important areas that we see in terms of virgin CPR. See, now this is an important virgin CPR. You can just simply mark a box here. Price opened with this very strong bullish candle, and then very strong green candles it kept making. Almost no reds in the middle. And then in spite of making such strong bullish candle and breaking the central pivot of the virgin CPR, which was incidental with the R2 pivot also here. So let me show you here. This is the virgin CPR line, and this is the blue line is the R2 pivot. So in spite of this R2 pivot being here, as well as the virgin CPR being at the same level and the central pivot of the virgin CPR being at the same level, and in spite of making all these strong green candles, virgin CPR still was able to push the price lower up to the same day's CPR, and at the same day's CPR price made this bullish pattern, which was a bullish pin bar, which again price was unable to break. So can you see how price bounces from the virgin CPR to the current day CPR here, and then it again bounces to the upside. So it opened, price had opened at an important area, which was the previous day high. This was the previous day high here, which we have already marked here. So this is the previous day high, and price had taken support at a very strong support area. Still, virgin CPR was able to break that level and push the price lower towards the current day CPR, and then let me delete this. Then price made this pin bar here,
that was a bullish pin bar, and then price was pushed up again. If you had this area marked prior on the 6th of January, then on the 7th of January you would have been ready to not take a trade till the virgin CPR was either broken or at least till the point where price showed reversal sign at the virgin CPR. Okay, now let's go to this area and see how price reacts again. CPR for the same day is here and price makes this strong bullish pin bar. Now this happens to be the previous day high. So let me mark the previous day high for you. This is the previous day high. From this area, price take a resistance and falls back to the CPR. At CPR, price makes this strong bullish candle and the price is pushed up again. Now again when price reverses, it takes support at this area here. So let's mark that area. You can mark this box like this, and then price did not return to this specific level here again. Isn't it? You don't see price returning to that level ever again throughout the entire day. It had a big bounce on that day. So now let's go ahead and see if we see any reaction in price at that level. Now on the 6th day opens, and look at that. A level which was an important demand zone on the 5th of Jan, which is this level, has now turned into a massive resistance from which price cannot go up. You can see the big wick here on the top and this big red candle, and the way price fell from that level right up to the demand zone here, and then from the demand zone price bounced again and it went again at the same resistance and made this pin bar here. See, you can see this pin bar. So that is how price is going to react at levels which we already have marked. We should be able to mark these levels since these levels are given by market itself. Market gives us levels much prior in historical times, and it is our job to read those levels and mark them for the next day. Once you start getting experienced with marking these levels on your charts, you will not find it so difficult eventually.
So that's it for today's video. I hope you've liked the video and I hope you've understood how to mark support, resistance and supply demand zones and other important areas on the chart. All these areas help us to take trades better, ensure that we don't take trades in the wrong place at the wrong time. If you've liked this video, please hit the like button, subscribe to this channel and hit the bell icon so you're notified every time I post a new video. And also please share this channel and help me get more and more subscribers so this channel can reach out to more and more newcomers, because this channel is all about education. Thank you for watching and I'll catch you in the next one.